All right, let's dive right in. Today, we're tearing into a brutally honest take on emotional trading. This is going to be a direct, no-fluff look at exactly why most traders fail and, way more importantly, how you can actually fix it. So let's get to it. Consider this your official wake-up call.
Right out of the gate, the source material makes one thing crystal clear. This isn't about making you feel warm and fuzzy. It's about making you better. The whole idea is that if the truth doesn't sting a little, you're probably not going to change a thing.
And this just perfectly nails the mindset you have to have. The market is a machine. It's completely impersonal. It doesn't care if you're hopeful or scared or desperate. Success, according to this, starts the second you truly accept that and learn to disconnect your emotions from your trades.
Okay, so let's get into the hard part. It's time to confront the very specific behaviors that absolutely lead to failure. We're going to hold up a mirror here, and you need to be honest about whether any of this looks a little too familiar.
It's such a simple question, but man, is it powerful. Before we can even think about building winning habits, we got to get real about tearing down the losing ones. So how does a losing trader act when the pressure's on? You know, what's so telling about this list is that it all boils down to just one thing: raw emotion. Panic makes you impulsive. That fear of missing out, right? The FOMO, it drives you to buy at the absolute worst time. And then that gut-wrenching fear of loss makes you sell at the very bottom. These aren't strategies. They're just pure, unfiltered, knee-jerk reactions.
But here's the thing. That panic doesn't just appear out of thin air. It's not random. The source says it really stems from two very specific critical mistakes. And the best part? They're completely within your control to fix.
So the first and honestly the most common reason traders completely lose their cool and make terrible decisions is this. Look, the logic here is simple. The second you're trading with money you can't afford to lose, you're not trading the market anymore. You're trading your own fear. Your entire emotional state gets tied to the outcome of one trade, and making a rational decision, forget about it. It becomes pretty much impossible.
And now for the second big reason for panic. This one is all about your prep work, or more likely, your total lack of it.
Oh man, this one is huge. Instead of actually learning the language of the market, which is the charts, you're just scrolling through social media looking for some random guru to tell you what to do. You're basically outsourcing your thinking to the loudest voices online, and guess what? They probably have no idea what they're doing either.
And the source could not be any more direct about this. This is not a suggestion, okay? It's presented like it's a law of nature. Without the skill, you are literally flying blind. You will not win in the long run. Period.
Okay, so we've diagnosed the problem. You're trading too big, and you're trading blind. So now what? Now we get to the good stuff, the action plan. This isn't some vague advice. It's a clear, four-step framework to replace that panic with an actual process. So there they are, all four of them. I want you to think of this as your new trading playbook. Each one of these rules is designed to directly fight back against those emotional, impulsive habits we just talked about. Let's break them down one by one.
So before you even think about clicking that buy button, you need to be able to argue your case. What's the story here? What's coming up that could make the price move? Why are other people going to want to buy this after you do and at a higher price? If you can't answer those questions with a clear, logical reason, you're not trading. You're just hoping. And hope is a terrible strategy.
Rule 2 flows right out of that thesis. See, a proactive trader, a winner, they take their thesis and they find the key levels on the chart. You know, the old support and resistance lines. They mark their zones, they set their alerts, and then they wait. They have patience. But the reactive trader, they don't see any of that. They just see flashing red and green lights. They chase the green candles up and they panic at the first sign of red because they don't have a map. They're just reacting to the chaos.
This rule is basically the glue that holds your entire discipline together, and it connects right back to that number one reason for panic. You have to find that sweet spot, where a losing trade is just a business expense, not some kind of emotional apocalypse. Your position has to be small enough that you can stick to your plan even when you're wrong, but just big enough so that the wins actually matter. It is the one thing you have 100% control over.
And that brings us to our final rule. And honestly, in our crazy, hyper-connected world, this might be the hardest one of all. It's all about building a fortress around your plan and protecting it from that hurricane of outside opinions.
Here it is. This is basically your do not listen list. The point here isn't to be ignorant, it's to be selectively informed.
You want to be informed by data, not deafened by a million different opinions. Your decisions have to come from your own work, not from the emotional garbage that spreads like a virus on these platforms.
I know it's blunt, but it really drives the point home, doesn't it? If your moves are just dictated by what the crowd is doing, buying when they're euphoric and selling when they're terrified, you're not making your own choices. You're just following the herd, and the herd is almost always wrong at the most important moments. And that's really the big takeaway here. Look, opinions are biased, emotions are a trap, and well, hype doesn't last. The chart, though, it's a pure reflection of supply and demand in the market. It is the closest thing you will ever get to objective truth.
So, you might be feeling a little beat up after all that, and, well, that's kind of the point. But this final part of the source material puts it all into perspective. This isn't about tearing you down. It's about shaking you awake.
The message here is that being comfortable is your worst enemy. Gentle, soft advice is easy to ignore, right? It lets you keep making the same dumb mistakes over and over. But a harsh reality check? That can be the very thing that stops you from blowing up your account for good and forces you to build the discipline you need to actually win.
And in the end, it all comes down to this one final provocative question. It's a direct challenge to you. Success isn't just going to fall into your lap. It's earned. It's earned through discipline, through education, and through the willingness to do the hard work that almost everyone else avoids.
And we end on this really powerful aspirational note. It's not just a clever sign-off, it's a statement of belief. It's saying that the path is tough and the lessons are hard, but for the few who actually listen and do the work, the destination is absolutely worth it. The whole goal is to stop being one of the sheep and start leading the pack.